Hey everyone, excited to be back for this week's edition of Frequently Asked Questions for Commercial Real Estate. In today's video, what I want to do is talk about a term that is used in particular when you're looking at development, and especially development in areas that are blighted or areas that cities have targeted as places that they'd like to see more investment in. And that is, what exactly is a TIF, or also known as tax increment financing? So this is a funding tool, and we'll explain exactly how cities use this tool to be able to incentivize development in different areas of town. Now, before I end this video, I'd greatly appreciate it and like and subscribe to this channel. It really does help with the YouTube algorithm and ensures more and more people can hear this message and learn about the many facets of commercial real estate. So now you've done that, go and like and subscribe below. Let's go ahead and dive into this episode. All right, so as I said before, TIF means tax increment financing, and it's a tool that cities can use to help fund development in certain areas that they're interested in seeing developed. Now, the premise of it is that the way it works is essentially that the city captures the incremental increase in tax revenue, and from there they use that incremental increase in tax revenue to pay bonds that they've issued to different people, such that they can fund infrastructure building on the front end of a project. So just let's go through an example so it makes it a little bit easier to understand what I mean. So let's say that a city has a piece of land that is located in a blighted area, and there is a retailer that's interested in coming in and building a retail store at that particular site. Now, to do that, they're going to have to invest roughly $1 million in infrastructure upgrades. So that may mean roads, that may mean, increased sewer capacity, that may mean a variety of different things that are new sidewalks, and, the variety of different things that allow for the retail development to function properly on site. So if the retailer had to do all that themselves, maybe the project is not a viable option. And so what the city will do is if the retailer comes to the city and the city wants that type of use on site, they may pursue the option of implementing a tax increment financing structure. So what essentially will happen is the city will issue bonds. So they'll find ways to be able to secure money that they can then issue to be able to provide the infrastructure increases, or provide the infrastructure that the retailer needs to be able to have the retail development on site. And then once that capital is outlaid and the retailer comes in and obviously builds whatever they're doing, then there's going to be an incremental increase in the tax or the assessed value of that property, right? So in this case, let's say the lot itself was in a blighted area, and the actual assessed value of that property is only $10,000. But after the city creates a TIF district, and then they issue bonds, and then are able to help fund some of the infrastructure upgrades for the site, and then the retailer comes in and invest their own capital into developing the building and whatever else is remaining for the development. Now maybe the assessed value is $1.5 million. So in that case, let's say in the first example where the lot is vacant and it's a $10,000 assessed value, if there's a 2% property tax associated with that in that city, then the tax revenue for that particular property as it stands is only $200. But if the new assessed value after the property is complete is $1.5 million and the property tax remains at 2%, now the tax revenue received on a yearly basis from this for the city is $30,000. So this is where the incremental difference in tax revenue comes in, and that's how it's going to be able to help fund this particular project. Is what they'll do is they'll take the $30,000 in new revenue that they're generating and subtract it by the $200 that they were receiving before, and you're left with $29,800. Well, that money then goes towards paying back the bonds that they issued to be able to fund that particular project. So the city's still collecting that $200 for that lot, and the remaining balance of whatever was the increased value of that or the increased tax revenue generated by that particular investment goes to pay back the bonds that were issued for that site. And typically these TIF districts will last 15 to 30 years. So depending on the way they structure the bonds and the the percentage interest for what they're paying on the bonds, et cetera. It's going to be, how they approach that timeline. But let's say after the 15 years, they've worked on paying back all those bonds over the 15-year period, and after that 15 years is up, now instead of the money going back to pay back the bondholders, that money then comes to the city's general fund, and they can use the funds accordingly. So, again, it's just a way for cities to be able to help developers avoid a significant upfront cost, especially when it comes to infrastructure, and allows them to be able to make the economics work on the front end, so that ultimately they're able to develop the project, and over time, obviously bondholders are happy when they receive funds from the bonds that they've issued over a period of time. And then once the TIF is unwinded after that time lapse is expired, then obviously the city benefits because they have a piece of property that now has a higher assessed value and likely has been reassessed over time, and they get to keep the higher tax revenue to go fund other things that they're interested in funding. So that's just high level way of how TIFs work. I mean, obviously I'm not a TIF expert by any means. I've never set up a TIF myself, but these are ways that you can maybe look to develop or look to fund different pieces of developments depending on what the city's interests are. So if you're in a municipality where there are areas that are designated as TIF districts, look into it and see if there's ways that you can maybe make development works in that area, and maybe that it helps make those projects pencil so you can ultimately take on what you're trying to do. So hopefully you gain some value from this video. If you guys like this channel, please like and subscribe. It makes a huge impact on our ability to reach a broader audience, and we obviously greatly appreciate the support. Along with that, if you guys are looking to buy, sell, or lease commercial property here in Louisville, Kentucky, or surrounding areas, I'm a commercial broker in town. I'd be happy to help you with your search. My number is 502-536-7315. Thanks again so much for tuning in, and we'll see you all next time.